Good morning, guys. This is Alan again, right? And today, like I promised, we'll be going over fair value gaps and imbalances, right, in the marketplace. Okay, and all the ICT traders also know that we also use the word inefficiency, right? The inefficiency delivery of price in the marketplace. Okay, so what does it mean when a price is delivered inefficiently? Okay, this means that price is leaving gaps. Okay. An efficiently delivered price should look something like this, where it's being filled. This up candle here, down the next candle fills it, fills the void here. All right, continues going higher, right? Might be a little gap here, fills it, right? It has to be filled, right? But there's gaps, there's times in the markets where these gaps don't get filled, and we can target those gaps as liquidity. Okay. So for example, right, we see that there's been a huge gap. The most obvious one is right here. Huge gap here, runs higher, takes out this high here, right? And then it drops lower, filling its gap. In doing so, while it filled this gap, right, while market makers are doing this, they're leaving this gap open to fill it later on purpose. You can see it, right? Takes this out, absorption, takes out outside liquidity, runs lower, creates a gap down there. I can promise you there's a gap. I'll put like $1,000. Yeah, right here. Drops lower. There's a gap. You see how this one comes back up. Doesn't really fill it all the way, but almost fills it. Right. Comes back lower. Comes back here. Right. Now there's a gap here that they could definitely target later. Right. And it's a run higher to fill in this gap here, and potentially even just running these highs and filling this gap here. Right. As you can see. Right. Look at that. Comes here, wicks up there to fill, make sure everything's filled. Right now, this opens this gap up, right, for price. And guess what? The price fills it. And that's what I targeted for my trade, right? So it's very, very simple, right? Concept, right? But like I want to tell you guys how important fair value gaps and liquidity voids are, because if you don't start using them and start noting where they're at, you can take your trade and there could be a fair value gap resting right above it. And you're like, yo, why am I in so much drawdown? Or why is or even like worse, like why is my stop loss getting ran every time? And then it reverses after. Like I can see the market move, but it moves in my direction after it runs liquidity. Like, how am I able to tell where liquidity is? Well, like I said right now, this is a good way to see it. For example, right? Price runs higher here, fills it in here, fills in the gap here, right? It's a little gap here, right? And it runs higher. And this openly fills in this down candle gap here, right? You guys see it. This comes down, tries to fill this in, which it does, right? Runs higher to fill its own here and take out buy side liquidity. Look at these equal highs right here. It's perfect. You can't even like tell me it's not. Equal highs, fills in the gap, runs higher, takes it out, creates a new gap, right? Look at this, fills the gap, order block here. These are the trades I like to target. I told you guys I love to target them, right? A gap with an order block resting below it, okay? Let's say you do take this trade, okay? I would definitely not recommend it because it's probably during like FOMC or news, all right? All right, you target to fill this gap. That's it, okay? That's what you're targeting. Fill this own gap. As soon as it fills it, you're out. 1 to 2, 1 to 2.3. Okay, 1 to 2 trade setup. Beautiful trade setup. 1 for 2. You can target these very, very simply, right? Takes you around 5 hours, 4 hours to fill it. 1 to 2 trade in 4 hours. Perfect. Okay. All right. And when you can start correlating these together, that's when you're able to start taking good trades, right? So I wouldn't take this one, but I probably would have taken this one. Okay. For example, all right. 15. Look at this. This is the trade right here. All right. There's a gap right here. Let's write it out for you guys. There's a gap right here. Fills it, right? Drag this down. OTE, right? And guess what else there is there? Bang, order block. Okay, so there should be. Okay, very, very simple. right? As you can see, this is how you should be trading, correlating these trades like this manner right here. Okay, where are you targeting? Probably target these lows here, or even this gap I said was earlier this week, right? This is the gap I'm looking at. Bang, fills it. So let's say you did enter this trade with me, or you guys took my signal I sent out, right? 20 pips, fill this, bang, 1 to 4. Okay, 1 to 4 trade setup. However, you're not making 4% off this trade. Okay, you're taking partials out, this level here, this level, or just taking partials here, here, and then finally here. Okay, because you don't know if price is going to run this and then run higher and then take it out later. All right, but this was a high confluence trade. As soon as I saw it break down, I was like, oh, okay, this was a good trade, beautiful trade setup, right? And many of you noticed, or if you haven't noticed, right, look at this bear show B, right? You see this first swing lower? I want you to notice this second swing here, which is your re-entry. Okay, if you missed this move here, stop loss here. I mean, same trade position, 71. Let's say your stop loss is here. I would just normally put it here because I don't want to see this taken out. However, manipulation could run this again, right? So just put up there, be safe. Same thing. Let's say you just targeted this first level liquidity here, 1 to 2 trade. Okay, 1 to 2 trade setup. Let's see how long it took you. Wow, 6 hours to do a 1 to 2 trade setup again. Okay, and these are the trades you need to find. Okay, and I know, right, it's obviously very, very simple in hindsight, but when you practice in hindsight, that's when you start seeing it in real time. Okay, start seeing these fair value gaps. Okay, they're getting targeted. You need to see that. Okay, this one here fills fair value takes up stuff like it retraces higher for them to drop lower. Very simple. It's super simple, right? Like you see a gap here, right? Guess what? Price comes up, fills a gap. You see that? Fills the gap perfectly, hits this order block right here, sells off. It's very simple, guys. You guys can start seeing price move in these move from liquidity to liquidity. Okay, is what ICT says in his mentorship. Okay, he teaches us how to trade from liquidity to liquidity. Okay, I'm giving you guys that right now for free, but I need you guys to understand, like when you start trading, look for liquidity. Like my other videos, I give you guys hints on what he taught me in mentorship. Hey, why would you continue buying when buy side liquidity was already been absorbed and now it's dropping? It doesn't matter if it's an OTE for it to go high. It already took out buy side liquidity. Why are you taking it? Vice versa. Okay, so like I said, for this, I want you guys to start targeting these voids and imbalances in the market, okay? Because price will target them, right? As you can see, price comes up here, targets it, drops lower a little bit, right? Right here, wicks down, fills this gap here, continues running higher. Price isn't random. You're like, holy, that's a really random wick. That's not a random wick. It's to fill in the imbalance here. Okay, it's to balance out the price there, to efficiently deliver price there. Okay, so very, very simple concept, right? I know, but I do not want to get too into it. This was just a basic foundation for everyone that needs to kind of understand what ICT is or who's new to trading, right? I do understand ICT is not really beginner friendly. So I hope this video really, really helps you guys out, all right? And a quick note is that I will be opening one-on-ones for this month, probably for around like 20 days ish until maybe January. Just because, like ICT says, that's not his trading months, and I kind of follow that rule as well. So I will be opening one-on-ones, just to clear questions up, answer questions or whatnot. And if you guys are interested, hit me up on Instagram. It's not going to be like $4,000, $2,000, right? It's a lot cheaper than that. Okay, so if you're like, hey, I kind of get ICT's concept, I just need some help grasping it, or I'm making some things more clear, message me on Instagram. We'll set something up, and yeah, okay. And that should kind of wrap this video up. I'm trying to show you guys one more example. I'm gonna show you on a daily, because this daily one was fire. Okay, so last example for the end of this video. Okay, see this gap right here to this down candle here, this here. So right here, right? I'm extending it out at the time. Bang. What do you see? Right? You see price reach down here, right? Fill this gap in, runs higher. Okay. This price did the same thing, came lower, tried to fill it, hit the OB here, ran higher, took out highs here, equal highs, took it out, drops lower, fully fills in the gap. So the gap technically have been here by now, right? For this kind of fills it in now. So this gap no longer exists, runs opposite direction, fills this in, hits OTE, right? And just runs lower, right? So we definitely want to see what happens with EU right now, since it is just kind of going sideways, if you guys haven't noticed, right? The candles of these bodies are staying below this order block, which kind of like. However, you know, this order block here has been also holding price up, right? So is this trading from this order block to this order block? And we have to kind of see what's going on, because look, every time it comes to this order block here, it drops lower. Okay, every time it comes to this order block here, it pushes higher. So it's keeping price basically in this nice little range right here. Okay, this very, very nice range right here. In this range, that's the majority of the trading is being done. As you can see, the bodies are always here, right? Let me drop this a little lower, right? Majority of price being traded here. Okay, so I wouldn't be surprised if it just, you know, decided to like drop lower or just run higher, take out highs, fill this gap here potentially, and then drop, right? Or seek some more lower sell side liquidity and then leave these gaps for open, right? So it's gonna be a very, very good year next year. Okay, so if you guys want to hop in the signal group, you guys can. I will be looking for these moves. Okay, and yeah, hope you guys have a good day, happy holidays, and Merry Christmas. Yeah.